Weekend all. Ira Epstein with your weekend edition of your metals market wrap-up, and this is for Friday, and we're now at the 20th of December, 2019. I want to remind you that I am going to be out of town this coming week, the Christmas week. Reason is there's a half day of trading on Tuesday, then the Christmas holiday, so that'll be when I'm out. I'll return to the office on Monday, the 30th or so of December. So you will see me again. While I'm gone, for those that are morning subscribers in the videos, I'll be putting those out, but they'll come out later. So where are we on the metal markets? Remember, this is the weekend edition. We'll have one monthly chart and then weekly. These are not the settlement prices yet, as we're only about 310, 314 right in that time zone, but it'll be right in this area. That's what the market did. You had quadruple witching hour, witching day today, so you had a lot of volume in the stock market, but it's still a new record. And these other markets, well, we're looking at impeachment. We're looking, does that trial ever go to the Senate? We're looking to finish up the U.S.-Chinese trade deal. All the good news on trade. The froth is in this market, in the stock indices. It's as though it just doesn't stop. Everywhere I go, people will grab me and reminded me, and I said it on Fox TV today, that it reminds me of that real estate bubble we had when everybody just wanted into the market. I am not calling a top. I am saying it'll come out of it when it decides to do it, but you got to keep your eye on it. When you look at gold, we're in a corrective mode. You have been coming to the lower highs, lower lows. However, the market is also staying over key moving averages. It would not surprise me that when we reopen next Monday or Sunday night, that the 18-week average gets over that 100-week. The 100-week is the green there on the monthly chart. Why would I say that? Well, it won't actually be Sunday. It'll be next week, the week after that, when you start the new year. As long as prices stay up, you're going to lose a month back here on the 18-month average. It'll probably make the market go up. You got to think the math ahead of time. On the weekly chart, this corrective move to 1459.10, I can't say that it's done correcting to the downside. I can say that the bias remains down since you're under 1489.80, and that's the resistance point. I can say when I look at this chart that all of a sudden the market's gone sideways. Seasonals turn up next week. Seasonals do not guarantee the price action will go with it, but they do turn up, and I look at them on a 15-year basis, and the market gets a better bid than it does an offer. When I go to the swing lines on the weekly chart, they're higher. You got higher lows, higher highs. That's bullish. The market is under the 18-week average, so the bias is down. The two cancel each other out. When I look to see where the Bollinger Band is, that's been the support zone. Now, 95% of the time, the market will trade within these black bands. It can push on them, it can get over them for a brief period or under them for a brief period. But the more that they start narrowing in, eventually the bigger the move that comes out of the market, because you're compressing price, you've lost volatility, and you think of it just as spinning around there. Right now, as I said, when I look at momentum, it's trying to correct itself. It's trying to point up. I don't look at momentum on weekly charts as being overbought or oversold. It's either sideways, pointing up, or pointing down. I'm going to say this is pretty much sideways right now. So the swing line up, the bias down, sideways momentum. On the ETF, you're trying to lift out with your momentum a bit here. You've got, just like the futures, the swing line is up, but the bias is down, so you're in the middle of no man's land. Resistance, 140.44. Take out 136.38. It'll be a very disappointing number. On the GDX, what you have is a market that went bullish today. Why? Higher lows, higher highs. The settlement is 27.17. The 18-week average, I'm wrong on that. It closed under it, so the bias is still down. The market failed right against that 18-week average of closes. So this, too, is in no man's land. Bias down, swing line up, and market momentum not doing you an awful lot. Gold-silver ratio coming back to the downside. When this number and if this number gets underneath the 18-week average, then I will say silver has developed a much more, a strong bias to the upside versus the gold, which may be struggling right there. And as you can see in silver, you had two tests past 2 weeks of the 18-week average. Now you're lifting up and out of the market. The rally was nice this week, but it did not take out the last rally high of 1724. A bit of a difficult market right here. Copper market, well, U.S.-Chinese trade deal has lifted this market. The world is hoping that with the end of that and just going forward, maybe we get to the point where copper, which has been in a deficit versus a demand, by the way, people should be looking at that part, and that's because copper's been so cheap that the mines didn't really invest that much money. And now you're going to see over time, if we get better demand from world economies, the copper probably has a bit of spareness to the upside. It could be a $3 commodity, in my opinion. In the platinum market, sort of a market that's looking for its way. It's more bullish than bearish. It's higher lows, higher highs. It came back today, settled under the 18-week average, which is 913.30. So bias down, swing line up, and momentum has gone flat. In the palladium market, if you look at the daily chart, you're going to fall out of your chair. The market was down very large today, almost $100 an ounce. But for the weekly, you're still up $10. Now, that's pretty good action. Where are you fighting a battle? Right against that the upper Bollinger Band. No surprise. If you've looked at the market before, it is stalled there. When it's hit it, it runs it. If the momentum stays up, and the momentum on the weekly chart is still up. So while the daily chart is correcting, and probably palladium was the best gaining metal of the year, not a surprise to see some year-end profit taking. Last in the dollar index, the market came down this week, hit the lower Bollinger Band again. It hit it for the first time, and I'll take you to that, on the bottom side right here last week. When you hit it, it's often, the first hit often results in the market. You can slide through it, but it tries to act as support. That's what you did. Resistance back at the 18-week average, momentum sort of in the middle of no man's land, and you're not trending. You have a higher high, lower low. Want to remind you, if you haven't tried my research, you might want to do it. My morning subscriber video is where I put out about 5:36 in the morning my trade ideas. And I'm able to do it on 40 futures charts, 5 ETFs. Now I am going to start an ETF service that is just for ETFs, all the different sectors that I think you've wanted. A lot of you have written me on my YouTube page, and I'll create the sectors and we'll get it going, but it'll be a separate video. If you'd like to try out the futures video, what the heck, it's $7.95 for the first 30 days. Give it a try. Go to our website under the word research. You'll see all the explanation of what this is. In the meantime, you have a great holiday. I will see everybody a week from Monday with our end of the day wrap-ups. Take care now.